Bull Bear Buzz podcast for decoding markets, fueling minds. Welcome to the Deep Dive. Today we're diving deep into the world of Indian Railway public sector undertakings, specifically looking at IRFC, RVNL, and Railtel.
Right.
You're here because you want to get smart, fast on what's important without getting lost in, all the noise, and that's exactly what we're going to try and do.
That's right. And the market's been, interesting lately, hasn't it? These railway stocks have certainly seen their share of ups and downs. Following a bit of a sell-off, the recent announcement from the Union Cabinet approving those 4 new railway infrastructure projects, worth a pretty significant 18,658 crore, that seems to have really sparked renewed interest.
Yeah, that 18,658 crore figure, it definitely makes you sit up and take notice.
It does.
So our mission in this deep dive is pretty clear. We're going to get to the heart of what IRFC, RVNL, and Railtel actually do. Look at where they stand financially, right now. And then unpack what the experts are saying about their potential as long-term investments. Okay, let's unpack this. Starting with the Indian Railway Finance Corporation, or IRFC.
Okay, IRFC, established way back in 1986, so it's been around. It essentially operates as the dedicated financial backbone for Indian Railways.
The backbone, okay.
Yeah, think of it like the railway's own financing arm. They go out and raise money from financial markets, both here in India and internationally.
So their main job isn't actually building tracks or running trains. It's more about making sure the money is there for those things to happen.
Precisely. That's exactly it. They take those borrowed funds, use them to finance the purchase, the creation of railway assets, things like rolling stock, locos, track infrastructure.
Got it.
And then they lease these assets back to Indian Railways. It's through what's called a finance lease. It's really a fundamental role in keeping the railway infrastructure growing.
And this isn't some small operation, is it? Our notes mention they're a mini Ratna I and a Schedule A public sector enterprise under the Ministry of Railways. That sounds, pretty important.
Oh, it is. Mini Ratna I is a government designation. It gives them a certain level of financial autonomy, signifies they've hit certain profit levels.
Right.
And being a Schedule A PSC also indicates their scale and, strategic importance to the government. They're also registered as a systemically important non-deposit taking NBFC, that's a non-banking financial company, and an infrastructure finance company.
Okay.
It just underlines their critical role in the whole financial structure supporting the railways.
Okay, let's look at the numbers then. What do the current figures tell us about IRFC? We've got current price floating around 124, book value is 39.80, and return on equity ROE is 13.70%. ROE, just a reminder, is basically how well a company uses shareholder money to make profit.
Right. Key metric.
IRFC's market cap is, pretty substantial, 1,062,193 crore. The stock PE ratio is 24.8. Now, PE, price you're paying for each rupee of earnings.
Yeah.
For context, the industry average PE is 21.1. But interestingly, their historical average, the median PE, is much lower, down at 6.9.
That's a big difference.
Yeah. Dividend yield currently 1.29%. Price to book value comparing market value to asset value is 3.12. And we also have the moving averages, 50-day at 127, 200-day at 140. That's a lot. That's a lot of numbers. What sort of key insight jumps out at you there?
Well, what's kind of fascinating when you look at these, while IRFC's current PE, that 24.8, is way higher than its historical median of 6.9,
right,
suggesting the market values its earnings more highly now than in the past, maybe, it's still reasonably in line with the broader industry PE of 21.1.
Okay, so not completely out of whack with the sector.
Exactly. It might indicate that compared to maybe its peers in the financial sector, IRFC's valuation isn't necessarily stretched, especially when you factor in its critical role and that strong government backing.
Makes sense.
And the price to book of 3.12 also suggests investors are willing to pay a premium over its net asset value. That's often the case for stable, well-regarded financial institutions like this.
Now let's talk expert opinions. Prashanth Taps from Meta Equities. He seems to favor IRFC for long-term conservative investors. Why does he see it that way?
Well, his reasoning really boils down to IRFC's fundamental business model. Like we said, the dedicated financing arm, strong government backing. It's generally seen as a lower risk play within the railway sector.
Low risk, okay.
And he also points out the healthy dividend yields. That's a big attraction for investors looking for steady income with a long-term sort of conservative approach.
That makes perfect sense. Lower perceived risk, plus consistent returns through dividends.
Yeah.
And we also see Avinash Garashkar from Profit Mart Securities and Gaurav Goel from Finocrat Technologies.
Yeah.
They're also quite positive on IRFC, right? Particularly because of the government's increasing focus and investment in railway infrastructure.
Exactly. If you connect this to the bigger picture, government policy, the strong emphasis on infrastructure development is a direct tailwind for IRFC.
A tailwind, good way to put it.
Yeah, as the primary entity for financing these projects, they're inherently going to be involved in a huge chunk of this new activity. More projects mean greater financing needs, and IRFC is the established channel for that.
The notes also highlight something interesting. IRFC's stock price has come down quite a bit. From its peak of 229 back in June 2024, now sitting around 124. Some analysts are suggesting this might be an attractive discount for long-term investors. What's your perspective on that?
That's a really important point to consider, actually. A significant price correction like that. It can indeed create a potentially valuable entry point, especially for investors who really believe in the company's long-term fundamentals and its role in the whole growing railway sector. And the fact that this drop happened after a period where the union budget didn't initially announce major new railway projects, and then you get this recent cabinet approval, it does suggest a potential shift in market sentiment, doesn't it?
Yeah, like maybe the earlier uncertainty caused the sell-off.
Right, and the new project approvals could be the catalyst for a rebound. It's plausible.
And looking at the technical analysis side, Anshul Jain from Lakshmishri Investment and Securities, he sees potential for the stock to bounce back. He mentioned a target of 140, maybe even 160 to 165 in the next, 9 to 12 months, if it breaks above 140. He also pointed out the formation of a higher low on the chart and a bullish Marubozu candle.
Yeah.
Now, for our listeners maybe not deep into technical analysis, what did those terms sort of suggest?
Okay, simple terms. A higher low suggests that after a dip, the stock price found support at a level higher than its previous low point.
Okay.
This can indicate selling pressure is easing off, buyers are stepping in at higher prices, potentially signaling the start of an uptrend.
Now, a bullish Marubozu candle. Picture a solid green or maybe white bar on the price chart. Very small or no shadows, those thin lines top and bottom. It essentially shows strong buying interest through the whole trading day, from open right to close.
Okay, buyers in control.
Yeah, often seen as a powerful signal that buyers are dominant and the price might keep moving up.
Okay, that gives us a really solid understanding of IRFC. Now let's shift gears. Rail Vikas Nigam Limited, or RVNL, what's their primary role in this railway ecosystem?
Right, RVNL, established a bit later, 2003, they're primarily focused on the actual implementation of railway infrastructure projects, the ones assigned by the Ministry of Railways.
Implementation, so the actual building.
Yeah, it covers a whole spectrum. Laying new tracks, doubling existing lines for more capacity, converting gauges, electrifying lines, building major bridges, even setting up workshops and production units for railway parts.
Wow, okay. Hands-on.
Very much so. And they also have agreements to share freight revenue with Indian Railways on some of the projects they handle. So IRFC provides the finance, RVNL is on the ground actually building and upgrading. That's a crucial difference in their core functions.
Exactly.
Let's look at RVNL's financials then. Current price, around 346. Book value, 38.1. And a pretty strong ROE, return on equity, of 20.4%.
Yeah, quite strong.
Their market cap is 72,204 crore. Now, the stock PE ratio here is, well, it's quite high at 57.8, especially when you compare it to the industry PE of 20.7 and RVNL's own median PE, which is way down at just 8.9.
Big jump there, too.
Huge jump. Dividend yield is lower than IRC's at 0.61%. Price to book value is significantly higher at 9.09. 50-day moving average is 364. 200-day is 396.
Right.
What are your initial thoughts when you see these RVNL numbers?
Well, the most noticeable things are definitely that significantly higher stock PE and price to book value compared to both the industry and its own history.
Right, that premium.
Yeah, this premium the market's placing on RVNL, it suggests investors have really high expectations for its future growth potential. Now, the robust ROE of 20.4% does sort of support this optimistic outlook. It shows the company is generating good profits from shareholder investments, but The higher valuation also implies the market might be more sensitive,
Yeah.
more sensitive to any potential setbacks or delays in their project execution. Higher expectations mean more room for disappointment, potentially.
Right, makes sense. Now, Prashant Taps again, he suggested RVNL might be a better long-term prospect for investors willing to stomach a bit more short-term risk. What drives this perception? Higher risk, potentially higher reward.
The higher risk with RVNL, it primarily stems from the inherent nature of their business, really. Implementing these huge infrastructure projects can be subject to all sorts of challenges.
Like what?
Well, execution delays, maybe unforeseen site conditions, land acquisition issues, regulatory hurdles can slow things down, and just fluctuations in the economy can impact timelines or costs.
Yeah, lots of variables.
Exactly. But the potential for higher reward is linked to their crucial role in modernizing the whole Indian railway network. They have a strong order book, apparently, a big pipeline of projects.
Right.
Combine that with the government's continued focus on infra spending. It creates strong potential for consistent revenue growth. And that's what makes them attractive to investors with a higher risk appetite, seeking potentially greater returns.
And the technical outlook for RVNL. Anshul Jain mentioned a potential rebound up to 388. This was after the stock tested a major support level down at 311 and also formed a bullish Marubozu pattern, similar to IRFC.
Interesting.
Does this suggest a similar kind of recovery trajectory, maybe with a bit more volatility baked in?
That's probably a fair assessment. Seeing that bullish Marubozu after testing significant support is generally positive, technically, suggests buyers stepped in strongly at that price. The target of 388 indicates where analysts see potential resistance. But, like we just discussed, RVNL's underlying business project execution inherently involves more moving parts, more potential uncertainties than IRFC's financing model.
So more bumps in the road possible.
Could be. It could translate to potentially greater price swings, yeah. Short to medium term.
All right, let's move to our third PSU, Railtel Corporation of India. Incorporated back in 2000. They seem to operate in a slightly different segment, don't they? What's Railtel's main business?
Yeah, Railtel's core business is more around creating and maintaining a nationwide broadband and VPN services network. Think of them as the tech and communication backbone for the railways.
Ah, the digital side.
Exactly. They provide telecom, multimedia network services, and they're also heavily involved in modernizing train control and safety systems using digital tech. It's also worth noting they hold Navratna PSU status.
And Navratna. That's even higher than Mini Ratna, right?
Yes, indicates even greater financial and operational autonomy, a significant step up.
And they have a really extensive network, don't they? Passing through something like 6,000 railway stations.
Yeah.
Across major commercial centers. That's a pretty big infrastructure footprint.
It's massive, yeah. A real asset.
Okay, Railtel's financials. Current price, 282. Book value, 58.8. Return on equity, 15.2%. Their market cap is considerably smaller than the other two, sitting at 9,381 crore. The stock PE is 33.6. Now, that compares to an industry PE of 40 and a median PE of 27.3.
Okay.
Dividend yield is 0.98%. Price to book value is 4.97 in the moving averages. 50-day at 317, 200-day at 369. What key insights do these Railtel numbers give us?
Well, Railtel's financials paint a bit of a different picture, I think. Their PE of 33.6, it's below the average for the telecom industry, which is 40, but it is higher than their own historical median of 27.3.
So moderately valued.
Yeah, suggests a moderate valuation maybe, with potential for more appreciation if their growth plans, like in train control modernization or enterprise services, really gain traction.
Right.
Their ROE of 15.2% is healthy, shows they're generating good returns for shareholders. The smaller market cap, well, it could offer higher percentage growth if things go well.
But also potentially more volatility.
Exactly. Potentially higher volatility, maybe lower liquidity compared to the bigger PSUs. And the price to book of nearly 5 suggests the market values their assets and future prospects at a decent premium.
And Anshul Jain also gave a technical outlook for Railtel, mentioned a potential technical bounce up to 333. This was after what he called a failed breakdown against a 7-week consolidation zone at 275. What does that technical picture suggest to you?
A failed breakdown. Yeah, that can be quite a bullish signal in technical analysis. It suggests that even though sellers tried to push the price below a key support level, That 275 zone where it had been stuck for weeks, they failed.
The buyers held the line.
Pretty much. This failure often indicates strong underlying buying support at that level. So the subsequent potential bounce to 333 suggests buyers have regained control, pushing the price back up, maybe breaking out of that old range.
Okay, now let's try to bring all this together. Comparative analysis, expert recommendations. Avinash Garashkar made the point that maybe IRFC should be prioritized by investors because of its overarching role financing so many different railway projects, basically making it a key enabler for growth across the whole sector.
That makes sense.
It does, right. They touch so many parts.
Yeah, his argument focuses on IRFC's pivotal position. Because it's funding projects for lots of different entities in the railway world, it stands to benefit broadly from the overall expansion, the modernization efforts, potentially offering a more diversified exposure within the theme itself.
And Prashanth taps. He reiterated his view. IRFC likely most suitable for conservative investors, seeking stability, dividends, while RVNL holds more appeal for those with a higher risk tolerance, chasing potentially higher growth from project execution. He even suggested that for investors really focused on railways, a balanced portfolio with both IRFC and RVNL could be a smart strategy.
That's a classic approach, isn't it? Managing risk and reward within a specific theme. By combining the sort of relative stability of IRFC's financing model with the higher growth potential of RVNL's project implementation side, investors can aim to capture different facets of the sector's growth while managing their overall risk exposure. Seems logical.
Anshul Jain also weighed in on which might be the smoothest track for traders looking to capitalize on a potential rebound. He suggested that while all three stocks show signs of bottoming out after the correction, IRFC shows a better overall chart structure, better relative strength, making it potentially the most stable option for those looking for maybe a shorter-term trade on a railway sector recovery. So even from a shorter-term trading view, IRFC seems to get a nod for resilience.
That really just underscores the fundamental strength and, I suppose, investor confidence in IRFC's core business model, doesn't it? Seems to hold up relatively well, even during market volatility and sector corrections.
Okay, so let's try and summarize this deep dive for everyone listening. IRFC really stands out as the financing backbone of Indian Railways, strategically positioned to benefit from all this anticipated growth in railway infrastructure.
Right.
Experts suggest it could be particularly attractive for long-term conservative investors, especially maybe at its current valuation after that recent pullback.
Seems a fair point.
RVNL, on the other hand, is a key player in actually implementing these crucial infrastructure projects. Offers potential for higher growth linked to modernization, but that comes with potentially higher risk due to project execution complexities.
Yep, the risk-reward trade-off.
And RailTel, operating in that critical but slightly different segment providing telecom infrastructure, is showing its own signs of technical recovery. Presents a unique angle for investing in this space.
That's a really well-rounded summary, I think. It's clear each of these PSUs plays a distinct, important role in the Indian railway ecosystem, and their investment potential seems to align with different goals and risk appetites.
So, as you, our listener, consider the government's ongoing commitment to railway development and the distinct functions these three IRFC, RVNL, RailTel fulfill, here's a final thought for you to chew on. Considering your own investment strategy, your personal tolerance for risk, your timeline, which of these approaches to participating in Indian railway growth resonates most with you? Is it the stable financing route, the higher growth project execution, or the specialized telecom infrastructure play? That's definitely something worth further exploration as you consider your own investment decisions in this really dynamic and evolving sector. Thanks for joining us for this deep dive.